Hey everyone, welcome to the Real Estate Reveille, your dose of real estate inspiration. I'm your host, Daniel Colletti, and I'm passionate about helping you unlock the secrets to financial freedom through real estate investing and entrepreneurship. Whether you're a seasoned investor or just starting on your journey, you'll find practical advice, market insights, and actionable tips to help you build a thriving real estate portfolio. Let's dive into the world of real estate and take your financial future to the next level.
Welcome to Real Estate Reveille. I am here with Chutima from Rent Roll Capital. Chutima, thanks so much for joining me today.
Yeah, thank you, Daniel. Glad to be here.
Chutima is another warrior from Lifetime Cash Flow with Rod Cleef. We've had some conversations before, and she's helped me out on just kind of getting familiar with the space. And so I'm really excited that she's here to join us today. Chutima, can you just tell us a little bit about, your experience before you actually got into real estate?
Yeah, so I was doing finance investments in my whole career, starting from doing investments for a private equity fund. So being an analyst, crunching number, analyzing deals, see whether it's good or bad deal for the private equity, but that was focusing on business, right? And then I transitioned to corporate finance, doing financial FP&A for corporates. But again, those are companies that grow through acquisitions. So a lot of investment related through my entire career before I do real estate.
Awesome. And you're from Thailand, right? You grew up there. Were you working over there first, or did you transition here for your equity experience?
Yeah, so I grew up in Thailand and I did private equity fund in Thailand, but it was the fund from the US who wanted to invest in Asia. So they set up an office in Bangkok. So I helped them find investment in Southeast Asia. And then I came to the US for my master's degree and I landed a job in corporate finance after graduation.
Oh, awesome. Where'd you go to graduate school?
To UPenn, to Wharton school.
Oh, nice. Okay. And was that in financial accounting or?
Well, I did management major because I've been doing finance long enough. Yeah, I did undergrad in finance
already.
too. Yeah, and I did undergrad in finance. So.
Okay. Awesome. Yeah, I was looking at NYU Stern's program actually for real estate management. And then now, since I'm maybe moving down to Miami, I'm looking at the Miami University's program. So we'll see. But I'm a Lion myself. I did my master's at Columbia. So, UPenn, great school. Still, what tell me a little bit more about this equity experience. What kind of assets were you looking at? What was that underwriting process? How did that feed into getting you prepared for transitioning to real estate, say?
Yeah, so actually the fund that I work with, they are generalists. So I was fortunate to work on various industries and some of them are real estate related, hotel, hospitality, right? And then commercial, shopping malls, low cost housing as well, but that was in Thailand. So the regulations kind of different from here, but still kind of understand about the cap rate, have some understanding about how to do the financial modeling from bottom up. So how to drive revenue, cost, expenses, right, to NOI and use the cap rates to evaluate the property valuation. It wasn't an extensive experience because let's say those industries probably represent 15 to 20% of my experience when working with the private equity fund.
Okay, awesome. And when did you start getting into real estate investing?
To invest in real estate. He kept saying like, you should buy properties. And funny enough, I didn't jump into it right away. I was still like, well, my stock portfolio is doing well. I can still do stock market investments. I don't need to do real estate. And I did not. I did not need to do real estate. And then one day, I think he kept like turning on podcasts about real estate in the house. So I keep unconsciously learning about real estate and the benefits of it. And I was like, okay, that's interesting. And I started learning more about the creative financing. So one of the reasons that I didn't jump in right away was because I thought that I need like to put down 10, 20% the down payment, right, which is a lot of money. And at the time, I didn't have a lot of cash flow or cash to do real estate investment. So once I learned about creative financing or how we can actually put down payment at a really low percentage, and I realized that I have more accessible cash to do that, that's when I changed my mind and started looking into the real estate opportunities. So then the first investment was a quadplex, and we did a house hacking. We live in one unit, we rent out the other three. So we started getting cash flow. Or first, we didn't have to pay mortgage, and then we have extra cash flow from that building as well. And we started repeating the process, and I realized the benefits, a lot of benefits from investing in real estate, and then I just can't stop myself.
No, that's awesome. And that's one of the things that I really like to emphasize on the show is that house hacking piece, especially with the multifamily, where you can recapture that 30%, the average American spends 30% on their housing. You can recapture that by just getting a small multifamily with the same type of lending or mortgage that you would in any other case. And the rent income that you're going to get from those will replace your mortgage costs, right? Or it should if you buy it right, right? And then if you do that a couple of times or, after some time, that's going to exceed that. And you're now actually cash flowing and you're able to employ those, financial resources towards other investments. So, you mentioned creative finance, and how did you come about that? How did you learn about creative finance?
Yeah, we were looking into like seller financing. We're looking into subject to as well, but the subject to was too like aggressive or too risky for us from our perspective and our point like of life as well. We have kids. We want to make sure everything is safe, right? For
Yeah.
bigger deal size as well. We try to ask for seller financing when we see that the property is not cash flowing or the lending, the borrowing cost is too high for the property to cash flow. So we would ask the seller if they would be willing to do seller financing, and that can save closing costs, can make the monthly payment lower than the mortgage payment if we were to go to the bank. So that's one of the creative financing that we always consider when we make a proposal to invest.
It's great. And, just for clarity, because now when you say creative financing, it can be a bit ambiguous. And especially for somebody that's starting out, they may not know what you mean. And there's a number of different techniques. And like you mentioned, subject to, that's really just taking somebody's, deed and you buy that property with the current mortgage that's in place, which is different than assuming that mortgage where you actually have to apply for it. And then there's the seller finance piece where you're getting financed by the seller of the property, right? They are the bank in that instance. And then if you combine those, that can become very powerful. But as you mentioned, there's some risk with sub two and some additional hurdles there. And you have to decide if that's right for you. And I'm a sub two member with Pace Morby, and, I learned a ton through his program. And what I love about it is all that applies to commercial real estate as well. And you can take those techniques, and it's just kind of thinking outside the box to acquire a property. So that's awesome. Well, you mentioned that you're financially free, and congratulations on that, because that's amazing. And that's a huge goal. I know a lot of people in real estate investing, that is what we're trying to achieve, financial freedom before the traditional retirement plans that we're told about. Can you tell me a little bit about what that means to you, and what mindset did it take to get there and to shape what that looked like for you?
Yeah. So for me, financially free is when we are able to have freedoms and have more choices in life, right? So let's say when I started living in the US, right, and I just graduated from my master's degree, I had student loans. So every time I receive my W-2 income, I have to put aside some money to pay down the student loans. And then I would be like, oh, I don't have a lot of money to do this and that. I cannot go to travel or buy things that I want because I have so limited resources, right? And that's partially why I look into real estate investments as well, because I realized I need more cash flow. So the financial freedom is when you are able to do when you want it, without any more hurdle. Luckily, I'm not like the high spender. So my current cash flow from existing properties that we have can make me live the way I want, right? And if I want to lift up my standard of living, if I want to have a private jet, I would have to do more. Luckily, I don't want the private jet yet. But
Yeah, that's an important part of it for sure, right? What's that standard of living for you?
yeah. So, but it's basically like, at least right now, we can send kids to private school. We live in the house in the location that we like. We don't have to trade off like we used to trade off with when we started real estate investing. We trade off with our house location because we decided to do house hacking. So now we moved to a nice neighborhood and things that we can afford more than we used to be. And that take a lot of the mindset that you mentioned, that you asked. A lot of times people don't started to take actions because they have fear. Deep inside, like let's say many people didn't want to start investing, so like including myself as well, because it's actually because of the fear of not knowing what we're going to get into, right? Like real estate it requires a lot of money comparing to other investment asset class. Like stock investment, you can start from $100 or even less than that,
Right.
like $50. Real estate, you need at least 10,000, if not more. So then you start thinking about like, oh, it doesn't work out. You started having all this fear into your mind, and it's actually inside here in your brain. It's not something else. It's all things that we just imagine, right? So the way to help overcome fear is to educate yourself more, better, faster than others, right? So you want to replicate the actions that the successful people did, and then you will be successful like them.
No, that's a really good point, and you can't let that fear stop you from acting. But it is important to understand what risks are in this business and get educated on how you can mitigate those risks, and then employ that in your strategy, which all comes with surrounding yourself with the right people, right? And that's one of the things that I love about the Warrior program. And I'm also, I don't know if I told you this, but I'm in Eric Upchurch's cohort. They've got their military multifamily academy. So I'm doing those kind of together, and they're complementing each other wonderfully. I'm meeting a ton of great people, and you just need to pick people's brain, like, hey, what went wrong and how do I avoid that? Right?
Yeah, that's exactly right.
Help
Yeah.
me not put my foot in it and stop that from happening. So you've achieved your financial freedom, but obviously you're still working, and you're working on projects now, and you've got your business. And so what is the goal? What's the dream now moving forward?
It goes into more time freedom that's something I would like to have. And also like overall, like I look into the long-term life, not just career, but what I want to get out of my life when I turn 60 years old or 70 years old, right? There's a lot more things I want to do. I want to be able to travel the world and spend more time with my kids, like be more intentional when I spend time with them, right? So the more I can build, the more I can have. What it means is the reason I'm still working or turning this into the business is if I can help other people build their wealth, achieve their goal, achieve their dreams, right? It's more rewarding to me as well. And at the same time, I can get my rewards for helping other people. And then that rewards, I will pass it to my kids. It's just generational wealth. That's the one thing that make me started investing in real estate. It's just much better, easier to pass through wealth to real estate than other asset classes. And then I want to make sure I can retire comfortably. So we all know about inflation, how bad it has been and how it hurts many of us. Even this month, December, I feel like when I went to a grocery store, I think all the food costs has increased again. So I want to make sure that I can continue growing wealth, right? So that I can support my at least daily lifestyle that I want to have.
Yeah, absolutely. Time freedom is just important as that financial freedom. It's really not more important. That's what we're striving for. For me, it's taking care of the family too, and being able to really, I envision any medical emergency, anything that you care about that could pop up, like money should not be the concern. I want that to just be taken out of the equation. So that's a lot of the why for me. But yeah, let's get to the business. So Rent Roll Capital, tell me a little bit about your company. What's your mission? What's your strategy?
Yeah. So right now, my mission is to help business executives and business owners achieve their financial freedom, increase their wealth, and build legacy like I did. Um, and how we help them is we find real estate investment opportunities and bring it to them and see if they would like to invest with us. So they will become passive investors in the deal. And I, myself, and my business partners would be active investors, or we call ourselves general partners. So we have our daily active management routines or roles to manage the assets. And then we pass the cash flow and returns to our passive investors.
Yeah, that's great. And I know you shy away from the term syndication, and I actually love that you do, because even, you talk about what that is, or you mention that to somebody and nobody really knows unless you're doing it, like unless you're the operator. And so talking about investing in real estate the way that you do, I think is great. And so what, you know, you've got your general partners that you mentioned, you're working to raise capital with limited partners so that you can provide them that investment opportunity. What are some of the conversations that you've had where, especially with folks that have never done this before, they don't understand, and there's the concerns, and what's your experience, Dan, and some of the key things that you could highlight for us to help, shed light on the benefits of investing in a opportunity like this?
For passives of it is that you don't have to do the work. So real estate, many people say, oh, real estate will give you passive income. But if you own the property by yourself, you cannot be passive. You have to be active. You still have to work with property manager if you hire one. If you don't, you have to do everything that property managers would have done for you. Screening tenants, making sure the rent is paid. If they don't pay, you got to follow up, right? And when they live in your properties, tenants live in your properties, there will be always repair, maintenance, call. Nobody can avoid this, I'm sure. So how you want to manage those, right? So it's become active before you can get passive income. But if you are passive investors, you contribute the capital to the investments. You have your general partners, as I mentioned, like myself or other business partner like you as well, Daniel, will help manage all those. And the passive investors can still enjoy the benefits of the cash flow that the property generates, the depreciation, which will become tax benefits through your tax form. When you do investments in syndication, you receive a K1 form, which is a partnership, unlike stock market where you get, I think, 1099 or 1098 form. Anyway, it's just different type of incomes that you received when you invest in real estate in this type of model.
Yeah, I like to think about it. If you could call up, the CEO of Google to say, hey, how are my investments going? That's kind of what you're doing here on the commercial real estate side. You have access to the CEO, to the partners who are actually operating the business. You are a shareholder in that company, and you're getting real updates on the performance of that business. Except you get a lot better tax benefits when you're doing it through real estate. And so what are the what's your strategy in terms of asset type? Like where are you looking in the United States? What type of asset are you pursuing?
Yeah, so our primary focus is multifamily apartments because people still want to live. They need somewhere to live. And cost
Hmm.
of owning real estate is now, or cost of owning primary home is now more expensive than renting. So there is still demand for renting. And also we also open up our opportunities on assisted living facility as well. That's what's the second deal that we did. And again, it's just matching the demographic profile in the country as there are more aging population, more and more aging population in the US.
Gotcha. And you're in Philadelphia, right?
Yes.
But you're operating nationwide,
Yeah.
or
So for multifamily, we look into both in Pennsylvania, like outside of Philly, just like wherever the population go. That's our key theme. So we look at population growth, right? In the cities, and then the operations of how the cities, what we call is whether they are tenant or landlord friendly. So basically, we would pick the city that is landlord friendly so that it's easier for us to operate the business. The, in the past, the primary focus has been in the Carolinas market, North and South Carolina. But I am opening up, like looking into deals in other opportunity or other markets as well, as long as it fits the criteria of population growth, job growth, and the diversified employers.
gotcha. And do you have a size scale you're looking at? You said you personally bought some of those small multifamilies. So are you in like the 5 to 30 unit range, or are you looking at large 100 unit complexes? Where do you operate in?
Yeah. So in the past, it's been like in the sub 100 units, but now 2025 and beyond, I'm focusing on like 75 units and up.
Okay. What's kind of got into your calculus for that?
Yeah. So in the end, I feel like the workload is about the same, but the larger the property, we call it scale, right? Like the more scalability you have, um, the higher profitability, or there's more room for errors, put it that way. Let's say if we were to have uh 10% vacancy, if it's out of 10 units, right, it's only one unit that you can have vacancy from. But if you own 100 units, the 10% is 10 units. So there's more room that you can manage and have time to play around with your business plan than the smaller unit size.
No, that's a really good way to look at it. And yeah, I know one of the other things I've considered, or I'm thinking about as I'm going through this, because I'm starting my business right now and on the commercial side, and figuring out where do I want to operate. And you've got your roles, you've got your acquisition specialist, who's finding the deals, your underwriter who's going to develop the pro forma, look at the property. Is it, what price should we buy at? Is it actually going to operate in a way that can cash flow for us and meet our pro forma? You got your asset manager. They're going to be on the ground, making sure that that business pro forma is actually being executed with your property manager. And then what you're doing, capital raising. But then a couple other things. You got your key principal who has to underwrite the loan on the property. And then where is that risk capital coming from? Is that coming from those four positions that are, of the general partners, or do you actually have to bring in a different partner that's not on your team to cover that risk capital or underwrite that? And depending on who you're working with, I've found that may determine what you can actually make offers on. Because, if I don't have somebody who can underwrite a $10 million property that's at 200 doors, then, we either have to go find somebody who could do that, or I got to bring down my expectation of what units I can look at. And so I just wanted to highlight that as some other factor when considering, all right, where am I starting if I'm working as an operator to identify some of these properties?
Yeah, no, absolutely. Because I started small too before I opened up for bigger deal size.
Yeah, I'm doing well. I'm starting out looking at around 5 million, under 20, 30 to 20. It's going to be in Miami, so it's probably going to be closer to the 15 to 20 doors at that price point. you go somewhere else and it might be a bigger door count, but we'll see. So, what are some other, what else do listeners need to know about capital raising? What are some of the biggest challenges that you've experienced with that?
Well, the capital raising is about building relationship and trust from your potential investors. Basically, if you put yourself into the investor's shoes, right? You want to ask yourself, like, why should I invest with this person? Remember that investors invest with you before the deal. They want to know you, make sure that they can trust that you can manage their money, right? Because if you are really capable, you can turn bad deals into good deals and vice versa. So you want to exhibit your capabilities, your integrity as well. That's very important these days as we started hearing news about frauds in the industry or how um, GPs, general partners, don't communicate as much as they should have with the limited partners. So for those who want to be general partners and raise capital, make sure that you commit to the relationship with your investor long term, not just before or while raising capital, but post raising capital. You want to make sure you keep communicating with them, whether your deals go south or not, right? You still want to make sure you provide all necessary information. And of course, you want to vet the sponsors for your investors as well, if you're not the sponsors, because sponsors can make or break the deal too. So for capital raisers, first, relationship with your potential investors. Number two, know the deals. You have to be confident. You have to love that deal. And how you do that, make sure you run the numbers and then you vet the sponsors. Make sure these sponsors are capable and will be able to run the deals long term for your investors. It's just come back to like how much you care about your investors.
No, absolutely. And, you mentioned underwriting there, and I know you're working on launching or introducing a class. Is that right? Can you tell us about that?
Well, yeah. So I am doing, so I feel like a lot of people still find it hard, having a hard time to underwrite deals or to truly understand how to analyze real estate investments. So I
Hmm.
try to simplify the process and like, how can I help explain it in kindergarten level language so that
Hmm.
everybody can communicate with their potential investors the right way. And also to my investors as well, if they need more clarification, like, so how do I know whether this is a good deal? Basically, like that's really the goal of like, how do I know that this is a good deal? That's what I try to build the course for that.
Are there any quick identifiers that you can share with us based off of that?
Well, not yet. It's still in the process. So if I have it, I'll share it with you. The first person, you'll be the first to know.
All right. I look forward to it. And then, you know, what are you looking ahead for 2025? What's coming up?
Yeah, 2025 will be, believe, an exciting year for most people who are still in real estate space and those who want to jump into real estate market. There will be buildings that come having the debt terms coming to due, right? And then we'll see how those existing owners handle that situation, because basically what happened is most of the buildings were purchased in 2020 to 2022 through the loans that last like 3 to 5 years terms. So
Hmm.
2025 is the year where those buildings, the debts of those buildings coming to due. And they were purchased at 3 to 4% interest rate. But in today's market, it's 7% interest rate. And it's hard for the operators to refinance at the new rate, even though they meet their budget, their forecast. But this big increase of the interest rate make the property not cash flowing as it would be if the interest rate would be the same at 4%. So there would be a situation that the seller will have to sell, right? So now we will look forward to those type of buildings, and we'll be able to, as I run the numbers, there will be buildings that we can buy it at a cheaper price than they were bought 2-3 years ago. Yeah, so
Yeah, I
there'll be
know.
a lot of opportunities.
Yeah, one of the things that we saw as well with the massive bear booming market over 2020, 2022 with those interest rates were all the developments that were in place. And a lot of that inventory has been launched in markets. And, you can look at Austin, you can look at San Antonio, even in Raleigh, and a lot of these places where new inventory has been released and the absorption has totally plummeted some of the rent growth and created some challenges with vacancy. And so, you put that into place with folks that have to refinance and now they've got these higher interest rates, and there's definitely going to be some opportunity over the next couple of years to jump back in, which is good news because I know this year has been slow for a lot of people, and a lot of this is market dependent and what sub-market you're in. But no, that's great insight. So what else do you want to share with the listeners?
So if you are still deciding whether you should do real estate investments or not, you can start from being passive investors and learn it from the deal, from the operators. And then you can move or transition yourself from being passive investor to active investor if you like it. If you don't like it, you can still get benefits of investing in real estate. Yeah, so, and it's just a matter of educating yourself, making sure you know what you are investing into.
Yeah. Once I got started, I knew immediately I was going to be hooked and I'll be investing in real estate forever. And so, that's great advice, I think, whether it's jumping in as an LP and seeing if it's the right choice for you and then continuing or not. I highly recommend it. All right. What is the best book that you've read this year?
I've read one book a month this year. So there were 12 books. And this depends on where you are, what you want to achieve as well. But I really like Atomic Habits from James Clear. So that's how I think this applies to many people, to whatever you are doing, not just real estate people. But people who wants to change your habits, right? You want to improve yourself, you want to be better. You need to change one habit, maybe 2, 3. But it's hard. It's really hard to change habits that you had built over the past 20, 30 years. So this book gives you an idea of how to change it gradually in a small change every day can transition into the huge change over time.
Yeah, definitely. That's a great book and 100% agree. So what's either, I guess, what is your December book or what is the next book that you're looking forward to reading?
Well, December book that I'm reading is about social media, how to build personal brand through social media from Gary Vee. And next year, so I will just digest all the learning that I did this year because I've read 12 books. I want to make sure I implement it. Reading without taking actions is not thing. So January, February is what I try to do is digest all information, implement it. And then another book that I've been looking at and haven't read it is the $100 million Offer by Alex Hormozi.
Okay. Yeah, I haven't read that one. I'll have to check it out. All right. Well, how can folks get in touch with you or get a hold of you?
Yeah. So the easiest way is LinkedIn. I'm very much active on LinkedIn. And it's just my name, Chutima Barrios. Or you can send me an email, Chutima, CHUTIMA, @rentrollcapital.com.
Awesome. Well, Chutima, thanks again for joining me on Real Estate Reveille. I really appreciate your time.
Yeah. Thank you, Daniel. It's been a great time talking with you.